Hi everyone, what's up? This is Darren from Fast Track Property. Today I'm going to go through with you about the outlook for the private property market in 2020, review with you what happened in 2019, what are some of the key things that changed in 2019 and in 2018, okay, and what you could look forward to and what you should be looking out for in 2020. Okay, so let's go into 2018 for us to now understand what's happening this year. I want to first refresh our memories of what happened in 2019, some of the major changes that has happened into Singapore real estate landscape. Okay, the first thing is that in 2018 July, what happened was that there was a change in the additional buyer stamp duties. What happens was that there's now more penalties being laid onto Singaporeans buying their second property. The first move was from 7%, right now moving up to a 12% tax. And if you were to buy a third property, it's now moving up to a 15%. So what really this means is that if you're thinking of buying a 1 million property and you're looking to pay just $70,000 of additional buyer stamp duty, today you're looking to pay $120,000. All right, and for the PRs who are looking to buy their first property, there's no change, but if they're looking to buy the second property in Singapore, they're willing to pay 15%, and for foreigners, it has moved on 5% to 20%. Of course, they have even changed this for entities and even for developers. Okay, so what this really meant was that in 2018, if you can recall, in July, there was a crazy line of queue of people just queuing up overnight, not really overnight, early in the evening till late at night to get their units so that they're not being penalized of two things. One was an ABSD of additional 5%. The second actually was really the loan to ratio. All right, so this was another factor that actually changed the landscape of the Singapore market. I was there participating in that, queuing up for my clients. Okay, so what happened was that from 80% loan rate has changed to 75%. All right, so moving on, this is another table to show you what happens over here is that there's a loan to ratio change. Previously, you could borrow 80% for your first home loan. Right now, it has changed to 75%. All right, so what this really means was that you got to come out additional 5%, which additional $50,000. So can you just imagine if today you are purchasing your second property, not only do you have to pay additional 5% tax, but if you wanted to borrow money for your second property, for example, and if your first property was being paid off, now not only do you have to pay more taxes, you have to again come out more additional down payment for your second property. So in total, for a 1 million property, it is around $50,000 for your ABSD and around $50,000 down payment for your property. So in a nutshell, this was really a crazy time for Singaporeans buying their first property or second property, and you're thinking, what are they going to do about it, right? So anyway, moving on, what happens is that for your second property home loan, you could now only borrow 45%, and for your third home loan, be 35%. Of course, this table splits into two parts, borrowing up to 30 years or borrowing beyond 30 years, whereby right now your loan will string smaller and smaller. So why is this so important? Because residential properties has always been a hot favorite for Singaporeans and PRs to buy, and the main reason for them to want to buy residential properties is because you could utilize your CPF. Okay, if you want to go into your commercial and your industrial properties, then there is no CPF to be concerned about because it's all full cash. So this is something that is being closely looked into by the government to control housing prices in Singapore. All right. Next, I want to move on into the property market performance in 2019. So this was a chart. I think you have already seen this when I was speaking to you about HDB properties. So for the whole of 2019, it ended off on a positive note of 2.7%. It was really good. I think it's something that we're all very happy about. Right now, ever since the 2018 implementations, we took the entire 2019 to really kind of calm the entire climate down, and serious buyers, serious investors are going to the market, and prices are sensitive right now. So a lot of these investors really like the climate, and I myself will love the climate in Singapore right now because we are not looking at a very speculative nature of the real estate market prices. Something going up too much or coming down too fast is something that my heart is not accustomed to, right? So here you're looking at a slow pace increasing of 2.7%, which is very nice. It's actually above the inflation rate, and I think it becomes a bit more comfortable. People get a bit more prudent in what they're buying instead of backfire, and a lot of them have issues paying off their mortgages. Okay, so one thing to note I wanted to go into for you all to understand was also two things to look at. What was the performance for the new launch versus the resale volume in Singapore for 2019? So you can see over here, the top part, it tells you from 2013 what was the overall volume for private new home sales, and at the bottom will be the private resale volume. So what's the meaning of resale? Resale, basically you're buying off another owner. New homes means you're buying off the developer, all right? Okay, so what's interesting to note was that in 2017, you can see that the volume for resale has always been higher compared to the new home sales. But in 2019, this thing kind of flipped on the reverse side. Right now, the resale value actually came down and the new home value actually came up. Okay, so this was puzzling when I was looking at it, because we were looking at a resale market whereby I met many customers and they're all looking and they couldn't justify the price factor of a new launch price versus a resale. Why should we bring money into a new launch instead of a resale property whereby I can move in immediately and it's of a lower PSF, and I do not want to spend unnecessary or take unnecessary risk buying a new launch property. Okay, but with so many of the online classes going on and so many seminars going on, a lot of buyers are now being educated into buying the correct property, and new launch properties has its advantages if you know what you're doing, and resale has advantages too. But if you choose the wrong property, either the new launch or for your resale part, you kind of understand that your money is going to be stuck there for the longer time, because you are not able to even sell at a price that you purchase a property at. Alright, so that was one of the reasons I felt that when these two rules came into play, many of the HDB upgraders were also kind of stuck, because at the time they were contemplating maybe I could keep my HDB property. It's already fully paid because I bought a BTO from the government, right? And I wanted to now buy my second property and kind of increase my portfolio, right? And at that time they could keep their HDB properties and pay the additional down payment of the ABSD of 70% and still get a 80% financing at the time. But right now, when this comes into play and they realize that why should I now keep my HDB property and pay an additional tax of $50,000 more? If I buy a 1 million property, I have to pay a ABSD of 120. And how long am I going to lease out my property for my HDB to be able to get back that money? And moving on, does it make sense for me to do it? Or should I just dispose of it because I don't see the capital appreciation maybe in the next 10 to 15 years? Because if you could take your property, say rental at about $2,000, it will take you maybe 5 to 10 years to take back the money of a down payment, less of all the other payments in terms of the interest that you're paying for the property and the additional taxes you're paying for a property, right? So it kind of didn't make sense. So that was what I felt, was that they're all moving now to the private sector and selling an HDB. And for those buyers right now who actually bought a BTO property, if you look for the news, a lot of them are giving out their BTO property and actually buying a new launch. Okay, a lot of them are actually faced with this situation whereby the strategies in place is that a lot of them are buying on-block properties. On-block properties means to say that it's already purchased by the developers, meaning to say that the building period of these properties would take maybe 4 or 5 years, right? And in early 2017, they have changed the SSD from a 4-year period to a 3-year period, right? So SSD basically tells you that if I were to sell right now, in the past, if I were to sell in the first year, I had to pay 16%, right? Right now, because it's cut down to 3 years, in the first year, if I were to sell my property, I would pay 12%, 8% and 4%. So if they would now just use this technique and buy a property, a new launch that actually takes 5 years to build, they purchase the property today, and in a short 3 years, even before the delivery of the keys to their hands, they could already put that property into the resale market, all right, make a handsome profit out of it, and move on and purchase an HDB in the future. All right, so that's what some of the cases are at the moment. Okay, so moving on, I want to just share with you also what are the top 10 performing private property home sales in Singapore in 2019. Well, here goes. In 2019, the top property sold a total of 875 units is Tampines, Treasures at Tampines, okay, followed by Park Extar, the Florence Residences, Park Clementes, all the way down to Affinity at Serangoon, and this is actually located at District 19. Okay, so we can kind of ignore Primon Grand. Primon Grand, this unit is actually an EC. Okay, that is why the per square feet is only at 1104. All right, there's one reason why Treasures at Tampines is able to sell so well, being such a huge development, because it is one of the only land left in Tampines, okay, to be near central, walking distance to Simei and Tampines MRT station, and at a great location and a good entry price of 1,003. As you can compare all the 10 units, right, this is one of the most affordable entry prices at 1,340 per square feet. Next following will be the Riverfront Residences at 1,322. So one of the reasons why a lot of them purchase such units is because the entry price is very comfortable for a brand new unit, because if you look at it in the future, then 4 to 5 years later, all these units will then become resale, and these are still very new units, and if the price is at an affordable price, it's easy for them to offload these units to the next buyer and make a handsome profit out of it, versus getting a more expensive unit, paying a higher per square feet. It's more difficult to offload at that time. Okay, so one of the things that you want to look at also over here is that for Treasures at Tampines and these 10 units, right, one of the reasons why the units here are the top movers, is, if you were to notice, is that half of these units, half of these projects are actually launched in 2018, right? Namely, Park Esta, Sterling, right? Travel, Riverfront, and Affinity. Okay, and this is something that I will expect moving on in 2020, because all these units are actually purchased early 2017 and launched in 2018, right? So this is a future timeline, right? So this year in 2020, I believe that a lot of agents and a lot of buyers are going to move on to old prices. Why? Because the new prices that are going to be launched in 2020 are those that are being bought in late 2018 or late 2019, and after all the plans have been approved by the government, they can then start selling in 2020. And the price of the land that they have purchased for the developers has significantly increased, and therefore the silver lining in today's market will be buying the properties, the kind of those that were actually being launched earlier, okay, at a better price. Of course, please look at the project you are buying. Please do not buy at a higher percentile. If you do, then of course the risk is going to be quite high. All right, even though you got actually at the older land prices. You follow what I'm saying? So if you buy a particular project at the old land price, but if you come in at a high percentile, means to say that if you were to purchase a unit at that time or today, compared to the rest of the units that is being sold over there, and you kind of bought it at a high price, like if you follow all my other videos, then to me this will be very risky. So do your homework before you put your money into the condo that you want to buy. Okay. Now moving on. Next thing you look at is actually what is left of the unsold units. What is the supply in the market right now? Well, it's actually dropped from 2018 of 34,824 units. It has come down by 13% to now balance 30,000 units in the market. Okay, what's in for 2020 for any one of you first timers that want to take advantage of being a first timer? If your income is combined income is less than $16,000, you consider the 3 ECs that are being launched this year, because last year you might not have much chance. But last year they only had 1 EC being launched, and that was Primon Grand, right? This year we are launching 3 units, ECs. The first unit is already in the market for sale, is Canberra, okay, Park Canberra. This is located at Canberra Walk, all right, it's over here. Okay, the next one that has been, I think you can hear that in the radio every single time, all right, is the Ola EC, and this is located at Anchorvale Crescent. All right, this is basically going to be opposite the Sengkang General Hospital, all right. So, and then the other one will actually be here. This is a plot of land. There's nothing updated yet in the street directory. This is just above Alps at Tampines. All right, this has actually been sold already, and we expect this to be, this plot of land to actually be launched for sale perhaps second half of this year. All right, these are the only 3 ECs that are going to be launched this year, and if your income, like I said, is going to be is less than $16,000, purchase this unit. All right, you can, but you got to look at the timeline that you're comfortable with, because the building time will take about 4 years, and then you got the MOP for another 5 years. 9 years later, you are then able to purchase your second property. If this makes sense for you, go ahead and buy. If it doesn't make sense for you, then perhaps you should relook that and buy a private property instead. All right, and if you're a second timer, you can also buy this property. Make sure that but if you're still in your MOP period, maybe 1 year later, you are not eligible. All right, but I do understand that if your MOP is coming maybe in the next 3 months or to maybe 6 months, the developer is able to assist you on that. Okay, now next thing that you want to look at would be, let me just look at this. All right, is that if I have this thing in soft copy, these are all the new launches for the 2020 projects, this entire Singapore over here. Let me just zoom in for you to take a look. All right, these are all the new launches that are actually coming in 2020, okay, right? Avenia, which is former Pacific Mansions, okay, this is at River Valley Close, and so forth. There's a whole list of them over here. Moving down, it tells you even, breaks it down to which are the units for sale in which district. The pink ones are the existing units. The green ones will be those that are going to be launched this year. Okay, you could do your homework and then take a look at what are the new per square feet in the area and whether that makes sense to your investment. Makes sense your investment or not. All right, and if you want to purchase a new property, whether you should go for the older ones or the newer ones, look and study the per square feet. You're not so sure, drop me a text and see what I can help you with. Okay, and this is a soft copy, so if you want to have this pipeline of new launches in 2020, just drop me a PM or put it in the comment box and I can just send it to you directly. All right, so do take a look of this, and I felt that in 2020 it's going to be a little bit uncertain right now, especially with the viewings arrangements in the new launcher because of the Wuhan virus. All right, so but I still think that we should go back to the fundamentals of property. What are you buying this for? Whether it makes sense to you in terms of the longer term. Do not buy something maybe just for the 3 to 4 years, because I think it's very difficult for us to foresee what could happen 3 or 4 years down the road. If it's positive, then I would say it was a good gamble for you. But if you're looking really into investing correctly, I would personally feel that have a proper structure to it and a proper plan to it, so that if any unforeseen circumstance actually hit you, you're prepared for it versus always hoping for the best. Okay, and with that, I'll speak to you soon.